Hello folks, this is David Schlossberg from Assured Concepts Group with an educational economic update for January of 2018. In this month's video, I'll discuss some of the major headlines that influenced the markets in December. I will also provide some insight into what these developments can mean to you as an investor. As 2017 came to a close, U.S. markets slipped a bit from their highs of the year. In the last week of December, all three major indexes posted losses. But despite this dip, the S&P 500, the Dow, and the NASDAQ were each in positive territory for the month and achieved a number of records for the year. In fact, December marked the 9th month in a row that the S&P 500 and the Dow recorded gains. The S&P hasn't seen this string of performances like this since 1983. And for the Dow, the stretch of gains was even more unusual. Its last run of consecutive months like this was in 1959. The NASDAQ also experienced a year of noteworthy gains. In 2017, the index rose in all but 1 month for the first time ever. Overall, each index posted double-digit gains for the year. The S&P 500 gained over 19%, the Dow increased by 25%, and NASDAQ was up by over 28% for the year. Probably the biggest economic event that occurred in December was the passing of the largest tax reform bill in over 3 decades. At the start of 2018, many changes are already in effect. The corporate tax rate has now dropped from 35% to 21%. Individual tax brackets have also changed. The standard deduction is now double what it was in 2017. In addition to these headline-grabbing changes, the tax bill includes provisions that may affect people's retirement choices, from IRAs to charitable donations. Generally speaking, the tax bill's supporters believe it will encourage business investment, increase hiring, and contribute to ongoing wage growth. Detractors warn about the bill's potential to add $1 trillion to the federal deficit. Time will tell what lasting effect the new bill has on individuals, corporations, and the economy. I can't go into all the specific details here, but if you have any questions about your own financial life or the tax implications, please feel free to contact me to chat anytime. Of course, tax reform is a big deal, but it's not the only development we experienced in December. In fact, many signs point to an economy that continues to grow. The final reading of third quarter gross domestic product indicated that the economy grew by 3.2% between July and September. Data suggests that the fourth quarter may have had similar growth as well, although we'll have to wait to receive the initial readings. What we do know is that both existing and new home sales jumped in their most recent readings from November. New home sales grew faster than they have in over 25 years. Consumer spending also grew in November, increasing far more than analysts had expected. While measures of consumer confidence slipped from the 17-year high that we had seen in November, they still stayed high in December. The Federal Reserve seems to agree that the economy is strengthening. Last month, the Fed raised interest rates for the third time last year in 2017, pushing the benchmark rate from 1.25% to 1.5%. It also increased its estimate of how quickly the economy will grow in 2018. One soft spot among the data we received, however, was the value of the U.S. dollar, which ended the year at its lowest levels in at least 3 months. Some analysts anticipate the dollar can continue to struggle in 2018 as the Fed considers continuing the raising of interest rates and other central banks potentially following suit. While the economy is not perfect, overall, December gave us a lot of good news to round out a year of many record highs in the markets and positive economic data. We look forward to seeing what's in store for 2018, and we'll continue to share our perspectives with you along the way. Stay tuned for next month's video update, when we'll have more annual data to discuss. That's it for this month's Educational Economic Update. Please remember that nothing we talk about here is a recommendation, and if you'd like to discuss your personal financial situation, you can call us anytime at 847-426-1077. We'd be happy to talk to you. Once again, this is Dave Schlossberg with Assured Concepts Group, signing off for the month of January 2018.
If you would like to discuss your portfolio or personal financial needs, Please contact us at 847-426-1077. Nothing stated in this presentation should be considered an offer of a securities product nor an investment strategy. The advisors of Assured Concepts Group offer securities and investment advisory services through FSIC. FSIC is a member of FINRA and SIPC.